Hello guys, glad to have you on board again today. Not that big of a deal regarding the cryptocurrencies. Yesterday was kind of a tough day, and apparently this is subject to the contract endings of the CBOE's futures contract, and this is what apparently caused yesterday's volatility as we broke both the high and the lows just to close right in the middle at the end of the day. So not that big of a market catalyst. Basically nothing has changed since today. We just wrecked some intraday traders both to the downside and to the upside. So don't overthink things. Basically says nothing is happening, but in order to assess the perspective we've been trying to make during the latest few days, which is just trying to figure out whether the market is ready or about to make a bearish volatile outburst, or a bullish one could very well be on both sides of the coin. The thing is that we also have a third choice, which is the one I tend to prefer right now, which is not doing anything. Not breaking resistances, not breaking supports. I mean, in a daily chart basis, meaning we're not going to break this down, or we're just going to try making it at a very short-term period, but failing it, and probably going to fail breaking that resistance as well. So, which leaves us with a pretty narrow range to work out within 6,000s. In large perspective to go along to 7,200, but probably not going to break any of those two, which suggests we might be heading in the desert crossing phase instead of a bearish volatile outburst to chase some stop losses. For many reasons, and we've said that yesterday, we have many retail traders selling right now and the prices are not moving. As you can see, the volumes are pretty damn low. We remain below 20-day average, even though yesterday was a candle that managed to go above that level. So we'll see how it goes today, but if we remain below the 20-day average, with lots of sellers in the ratio, we've got 80% sellers, means the sellers are low capitalized versus probably smart money who is buying them out, which makes the price not moving. The smart money might be buying what's available to sell. Many sellers with tiny volume feeding fewer buyers with bigger volumes. This is what makes the price not moving right now. This is what we call the price to volume structure, and I think right now this is what might be at play regarding what we have in terms of volumes. So this is highly speculative. You can never ever forecast a trade just out of those informations. You really need to have signals to do accordingly. Right now we've got nothing close to this, so we're just going to switch to the 2-hour chart time frame, see if we can have something. But yesterday's volatile burst basically got flushed by buyers and flushed by sellers. Basically means one thing, that even if we have signs of volatility, it rapidly is flushed out, which is still one more thing that should be leading us to thinking that the bearish volatile way still probable, but losing strength out there, as we had opportunities to trigger this, but the market is buying it out instantly. It's not breaking resistance either, so it's still too early to forecast anything, but the market just wants to do nothing. And doing this is not a good sign, not a bad sign, just a sign that the market is reducing volatility, which leads us one step ahead of possibilities or further possibilities of heading into the desert crossing phase, which leads us to a single decision out there, which is damn fucking wait. If we're about to make the desert crossing phase, you don't want to rush things. You don't want to trade, speculate, or whatever shit this is. You just want to wait for a clean long-term signal by breaking a resistance, and then you get in without a stop loss. You make a buy and hold, because you can be ready that the market can just try to break resistance to fuck up the stop losses right after. So you don't want to be among those who will be stopped out. You just want to be among those who will make the buy and hold and suffer long enough. It's going to take years probably to get to eventually the targets in which you're going to take the profits. So if you're still in a speculative perspective out there, you're just obviously wrong. All the speculators will be fucked up in here. No matter how strong you are, no matter how smart you are, right now speculating is way too dangerous, because speculators are fighting against long-term traders, and you don't yet know when someone, and probably generally it is the long-term traders who are taking over, but you don't know when. It could be volatile in between, could be dangerous, could be trappy, or could be just not volatile at all, but in the end, normally the long-term buyers will take it over. But as you don't know anything about the timing, you rather like to wait to have further informations rather than trading in a market that doesn't necessarily know where to go. As I said, Bitcoin is moving because of market traders' psychology. The speculators, the retail traders will just be wrong-footed no matter how hard and how deep their thinking might be. You just don't want to think right now, because anything you think is just going to go the opposite way. For a simple reason, which is not necessarily going to be the case in other crypto markets like Ethereum's. As I've been saying, I know I've been shocking a lot of people out there. I've received a lot of messages out there on the social networks, received a lot of emails, people saying me, Phil, you crazy or what, saying Ethereum wasn't a bubble. Don't play with words. I try to be as clear as possible with this, so I'm just gonna say that out loud one more time, so please don't mail me about that anymore. When I say Ethereum wasn't a bubble, as said, clearly wasn't a bubble regarding the pattern calling this way that I have to. Obviously it was a bubble, it was overpriced, so we had to make deeper corrections, but the price structure is way different than we had in the Bitcoin, which suggests to me, in terms of strategy application, the context I'm using in here is not the context of a crashing market. I'm using the context of a correction, which is different to me because I'm taking care of technical signals more than psychology, which is totally different when I do use a crashing pattern market. When I do use crashing context, I use psychological effect first, so I do have a look and I do take care of what retail traders are doing and thinking, and then eventually technicals will suggest and reduce risks to get into trading. But psychological effect is more important into crashing markets than it is into corrective market, which is the opposite. In corrective market territory, I just look for signals and I do buy, which I've been doing in Ethereum, but I do trade way differently regarding the Bitcoins. I just wanted this to be clear in your minds. Obviously, the Ethereums were overpriced like everything in the crypto markets. It's just, if you're thinking that the trading way of crashing a market and bubbling a market, yes, obviously it was overpriced. It was a bubble. They were retail traders trading it with massive optimism and things like that. Call it euphoria. Of course, there had panic in between. So we've had crashing emotions, as we did have bubble emotions as well in the Ethereum. But regarding the prices movements, they weren't that volatile as the Bitcoin were. So psychological effect is dampened into the Ethereum, which gives it, which makes it a lot more technical to trade, and this is why I like to trade this one instead of Bitcoin right now, just waiting to have the psychological pattern I want into Bitcoins. And I remind you those two, I either want to see bearish outburst volatility that is fucking up all the long-term all those who try to make buy and holds at stupid prices and won't be able to handle the margin trading and just going to be wrecked out, basically margin called by the brokerage and got out of that market, forced to release their Bitcoins. Obviously, the smart money will buy them out, but they'll get desperate because we have lots of good news right now. As I said, the goal in here is to get to desperate trading, which means either you're going to be desperate, being pushed out automatically by the broker because of margin trading, even though we have lots of good news in the market right now suggesting we should have higher pricings, but we're not having them. So this is abnormal to you and it's going to be unsustainable for your brain. Basically, it should go up and you're going to be stopped out. This is abnormal and this will lead you to desperate mode, which I want to see. This is one way of getting here. The second way is to make the damn fucking desert crossing. Not moving is going to drive you crazy. We should go up. We're not going up. We're not going down. We're not doing anything. That market is going to die. I just want to get out. Same thing. Desperation is out and down the road. Whenever I see this, I'll be buying. Right now, I think it's way too early to do either of those scenarios. So I just do nothing, which seems to be the best choice right now. Damn fucking wait, which is not the case in the Ethereum. So if you absolutely want to trade Ethereum, trade Ripple or whatever shit this is, trade something else than the Bitcoin. Bitcoin is way too emotional right now and we don't have yet the emotional mindset leading us to making buying entries. Other asset classes, first we have a look at the economic calendar. So yesterday, or during the night, we had the NZD number way above the consensus. Sorry, not way above the consensus, but higher than expected. And this is not what we wanted. So obviously AUDNZD has been pulled backing regarding that number. I wanted to have the NZD weaker than expected, which is not the case. So NZD is doing wrong regarding what I do trade with that currency pair, which is AUDNZD is going the wrong side, of course, because of this, but it's not breaking support. We're going to see this. And NZD-GPY not breaking resistances either because of this. So we'll see about those two pairs, how we should manage the risk regarding this. Also got a different number than expected regarding GBP, heading in the right side for this one, even though I've been triggering partial profit taking yesterday because we had warnings, signs below technical levels, so I decided to take profits yesterday. Obviously today we're up, reaching out to the targets, so fuck it. Once again, the market is just trappy. Why the hell did we have a violent pullback yesterday? Just to trigger some some stupid trading actions like I did, but I just wanted to secure the gains. So once again, taking a gain is not a stupid action ever. It's just that I would have liked to take the profits at higher pricings today instead of taking them yesterday. So bigger number than expected. We're gonna have a look at the GBP USD chart to see what's up. We've got manufacturing Fed index rising sharply right now. So we should have inflation. It really is what it says. At some point right now, it's abnormal not to have inflation on that market. So we should have at least 3% inflation, which the market is in pricing, and which the numbers, all the indirect numbers are suggesting we have underlying inflation that will show up. But we still don't have it in the numbers. So inflation remains low, even though we have indirect lectures of inflation showing red signs. So we should have the damn fucking inflation. We don't see it. So the market is playing unicorns out there. We know it's going to be wrong at some point, and we're going to have to pick up those numbers, and it's going to be done brutally, because a rapid pickup in inflation is not a good sign. It's not a good sign at all. It's sign of headwinds to reflect toward recessions, and that's not good. It means that the yields will rise pretty quickly and sharply as well, and that will probably lead us to bursting the credit bubble. So it's not a good sign for the markets to have surging inflation, even though we've had warnings for months that underlying inflation is showing up throughout many numbers, even uncorrelated numbers, but we still don't have it into the final CPI core remaining numbers, which means somehow we have a problem in here. We have a distortion, but the market doesn't want to see it that way. We just want to focus on what's good and not what's bad, which means we want to trend. Even though that trend is stupid, I stand on this. This is probably the last monthly trendy move we have that will lead us into recession trades afterwards. But as long as this trend wants to go up, can take a multiple months to lead us to terminate that trend. So you just want to ride it short term, or just wait and speculate to try finding the market top. I chose the second option. I remain on that perspective. Right now is not a short timing. We're going to see it that way. I'm going to show you that right away. So we're going to start first with the AUDNZD and the NZD correlated pairs I do trade. Then we'll have a look at GBP. We'll have a look at yieldings, and finally we terminate with the US indices. And we're going to have a look at individual trades we could have on some individual stocks, because I still do have Apple and Tesla in my portfolio. I think Tesla might be about to trigger end of the trade, so the taking profits of the remaining 50% I have in there should be done in the next, we'll see. I just need to have a signal today, but probably is going to be a taking profit right away. That's a nice gain, fewer gains than expected, but once again the market right now is really trappy. We're just moving backward and forward and oscillating this way. It's just really, really shitty. We're just waiting to have the trends to trigger, and it takes fucking huge amount of time. I've been trying to trigger those trends for months right now, and I'm not going to stop today. It's just it requires way more patience than I would have ever anticipated. But that's how it is. End of long-term scenarios. of long-term trends is something that generally the US, the American psychological type of approach. This will be today's educational content I'll be throwing to you guys. Before getting into Forex, I really want to talk about that. When we reach out to end of trend, of monthly trend, generally rise the tensions, rise the stress, and as you know, human beings have different reactions to stress. We've been talking about that in the psychology, in the psychological effects that we have when we do trade as humans. We have different reactions. Some will get into denial, some will get into flying away from the problems, some will just try to fight them. We have different psychological reactions to stress. But we also have trends regarding the localization of humans. We do have some trends. I mean, Eastern civilizations have a different reaction to the Western civilizations. And in Europe, we do have tendencies as well. Doesn't mean that because of you being an European or an American, we'll obviously have that psychology. It's just that if you make global, if you put people into boxes and trying to put statistical numbers out there, generally the Eastern population, so Chinese, Asian countries, have a tendency when facing stress to really cool down and try to figure things out with a deeper perspective, deeper thinking. They're generally thinking a lot to process problems. When they get to stress, they want to think how to get out of that stress. That's not necessarily the best situation. Obviously, everything is to be taught. I'm not saying any civilization or any part of the world is having smarter decisions than the other. It's just the way we react to stress. Generally, Chinese will have a way to overthink things. They will think and make it, they will have complex feelings out there, but they will try to somehow, it's not necessarily, they are really great risk managers out there, okay? And then you have the opposite face of the coin, which is the opposite extreme, which is American way of seeing this. This is Western populations, and typically this is the American way of trading. When we got stress, we know the stress is rising, we know the recession is coming. We just don't want to face it, we just want to fight it. As I said, like Chinese, are most likely going into to the flyaway kind of thing. They're aware of the problem, they're trying to figure it out, but as right now it's impossible to fight it, they're just trying to understand it and basically trying to wait for this to just fly away. They're like waiting, thinking but waiting. Then we've got the European way of life, which is more likely denial. We know we have problems, we clearly see them as well, but we're just trying to have a balanced feeling between the US version of the thing and the Asian version of the thing, and we're just right in between trying to figure out what's the best situation. And then we should pricing the risks or not pricing in the risk as the US is doing. And then you've got the US, which is obviously fighting against it. Once again, same thing in here. We know it is there. We know it is stressful. We know it's highly probable that we have a recession coming over. But the US has just said, fuck it, we're not going to have it. They're just fighting it. It's not going to help. It's not going to make it disappear. It's just the way we manage stress. And regarding this, you really need to think that through, because it might be the only thing that explains what we have huge differences, huge distortions throughout the stock markets, the worldwide stock market recently. We had Chinese pricing in the risks because they were just waiting for them to go out, so waiting for signals that we should rise again. So they've just been pushed down because money is going out. Inaction is not something that the market like. The market like actions. This is where the money got, where we got action, where the market was fighting it. It got right straight through the US market. So money has been flowing out of Eastern countries, going into Western countries because Wall Street want actions, want to make gains, want to have the price moving. So money got into where the risks has been rising, which is the US indices. So now the money is there. If the risk shows up, which obviously going to be the case, we're going to have recession. It's obvious. It's just a matter of time. We just don't know if it's right now or in a 2 to 3 years perspective. We can have that. So if you're shorting right now, and if it's 2 or 3 years ahead from now, you're going to be ruined if you hold on to your selling entries. But if this is to be coming in the next following month, then obviously Wall Street's going to fucking crash, because they've been pricing nothing. They've been fighting something that is bigger than them. It's not just about Wall Street. It's about the worldwide economy. We're overheating right now. We've overpriced. We've overextended the credit bubbles. At some point, it's going to have to release that energy. Okay? So see it that way, but that was today's educational thing. Just, if you're an American, be aware that the way you think is not necessarily the way other people do think otherwise, other places on the world. We do have trends out there leading us to believe that generally Eastern countries have a tendency to just wait when they're facing the problems. It's just something like they're trying to fly away from it, but they're just waiting to have action suggesting this is gone. Against that, we've got Wall Street trying to fight it, and we've got right in between European countries generally just trying to figure out a way of denial in between the Eastern version and the Western version. We're trying to make judges in between of that shit. So this is the way you should think. If you want to price in the risks, if you want to take risks, obviously you're going to US, and this is right now. This is what have been the case the latest few months. The market wants to take risks. The problem is that the more we're rising into the risk, as having stress, it's like, consider this. You have a problem. You don't know how to figure this out. You just don't know where it's going to end. Either you go more aggressive, which is what the US have been doing. This is some way of getting rid of problems. At some way, getting more aggressively than your aggressor is going to make you win the battle. Okay? It can work out that way. Problem is, for some time, when the opponent is really stronger than you, trying to fight back, it's just going to piss off the person facing you even more, and it's going to bite you even more. So, problem is, this is a dangerous game that the US are playing right now. I hope they're going to win, because it will be better for the entire world, because pushing a recession further away is at least good, because we're not going to face the recession right now, but the recession is going to be worse. That's how it is. If we do face it right now in the next following month, recession is handleable. Somehow we can handle this. I mean, the markets can pull back for 40-50% without entering into a deep recession that is going to have consequences on real economy for years. We just have a tiny recession. It's not going to be pretty, not going to be nice. We're going to have rising unemployment and things like that. Generally comes throughout recessions, but the economy will probably get to recover fastly afterwards. Problem is, if we wait 2 additional years, getting into adding 40 to 50% year after year, 3 years from now, we're going to have a deeper recession, longer recession that's going to last for years. And I would necessarily, I wouldn't necessarily like that solution. I'd rather like us to pay for the mistakes right now instead of just waiting and try to fighting them deeper and longer. And that will lead us to have deeper recessions afterwards. Not a best choice to me. We'd better have to face problems right now and get to better growth afterwards than just trying to last it forever at the price of extended recession trades afterwards. So anyway, back to trading after that thing. So AUDNZD pulling backward, still don't have anything like a bullish signal. But the last time we've been overselling is right here. And well, so far, we're just trying to fight it. We've made a candle close below that level, but the next one has been bullish engulfing. So we'll see how it goes. But for now, we're still above supports, and bearish signals cannot manage to validate. But we're in a breakout pattern. So what I'd like to see right now is the market invalidating that breakout. So I'm not buying anything right now regarding AUDNZD. I'm not reinforcing this position until we manage to get ourselves back to the breakout level, which is right here. So we need to get back there, and if we do get back here, we're going to have the bullish breakout. Simply because remember that when you do want to have confirmations of trades, it can either be, if you want to buy, okay, step one is to take a decision, knowing if you need to buy or sell. Okay, we know, to me, the choice is clear. We have to buy. AUDNZD, I'm only looking for buy entries, so buy signals. And the selling signals and validation will also be taken as buying entries. So the failure of my opponent's trade is a good sign to me. So I do want to trade when they fail. So if AUDNZD bears signal right here managed to get invalidated somehow, that's a good sign to me, and this is where I'll put additional money in that market. But in between, I'm either waiting for a bullish signal or invalidation of a bearish one. So far we have none of those two, so I'm just damn waiting. NZD yen, not breaking resistances either, but as you can see in here, we've got nothing close to a bearish signal, and we've been reaching a breaking through an exit signal, so it's suggesting we could go just right here, so I'm not releasing the trades in here, even if we break that resistance. To me, the exit signal suggests I might be holding my shares in here and just waiting to terminate that structure. We're going to make probably a double bottom, try to activate it, failing it, and then fucking it up to the downside. So I remain in that trade because I still have expectable reward out of this, and the risk regarding that reward is handleable. It's just, this is why when we speculate, we do put tiny amounts of money just to be able to assess the risks. I mean, risks is rising right now, but the fact that we are still in exit kind of pattern suggests that this is a handleable risk, a risk that I'm ready to take. That's it. We've got bearish attempt, failing it, so the bulls took us over right here, but from what I can see, they're not that strong. They're just waiting, trying to push as high as they can, but as long as we remain below that price, this is the exit pattern that is at play, and I'm just waiting for a double confirmation signal. So I'll just let the market trying to go slightly higher, but at some point it's going to surrender the gains. Whenever it will, I hope it will trigger a double bearish signal, still in that price area, and if we do that, I'm going to double down and add some money to the NZD yen, but for now, has to wait as well. We need to have double bearish signal, which we didn't have so far. So waiting for a double in here is what we should do. GBP USD, so it's reaching out to the target expected. So I'm not taking an additional layer of profit simply because for now we're reaching out to the expected target. I decided to take the profit yesterday at lower valuations, but the profit taking in here is done. So I'm remaining bullish on that market. I do have bullish trades, but I just took profits yesterday. I'm not going to trigger additional profit taking today. So I'm just waiting right now to have that market just let it go to further level. That's good to me. I'm taking gains. Or it should pull back, and I will buying those pullbacks. So I expect the market to just go probably pullbacking out of wave one overlapping or eventually entering into wave one territory. We'll see about that. But right now I'm just waiting for a pullback. So either it keeps on going up, but I'm not reinforcing, too risky to get in with more money. So I'm just letting it go. If it goes up, I take money. That's great, but I'm not gonna rise my interest on that market, rising the confidence I do have. We're gonna restore getting to 3 to 5 because this is good, but 3 to 5 with a buying at pullback perspective I do have. So I'm waiting for pullbacks to buy, not buying resistances right now. Okay, it's too dangerous for me to get into buying breakout trades. So that's it for the forex. Obviously, EURJPY is trying to fuck up the resistance as well, but we're reaching out to those resistances. We're trying to fake them. We're going higher than there. We've been triggering the stop losses as expected. Now we'll see if there is a follow through on that trade or not. This is basically driven by the euro, and I expect the yen to surge in the next following days. I'm going to show you this right now. So euro is surging. Yen isn't moving, which makes the euro under resistance right now and the yen on support. This is why I don't fucking want to release my EURJPY right now. I remain on that market. Even if it's going up, I think we're going up to go further downward afterwards. So I'm basically waiting right now. Just let the DOMs getting stop loss on the EURJPY. I can handle the risk out there, so I do handle that risk. I do wait patiently. I think the market's just irrational for months, and it's just want to push as far as it can before breaking entirely, and I'm waiting for this to happen. I think the euro is going to surge in the next following days, but not necessarily right now. As you can see, the euro index is right below resistances. I think we're going to have a pullback and then trigger the trend. So I think first we're going to have to dampen that thing further away, make another pullback wave, so pull back in the next days and weeks after surging again, I think, near the next timing, which will be mid-October. So we got a timing right here. I don't think that's the right timing. I think the right timing is to pull back into the early stages of October, in which I think right after, this is where you want to full up in euro currency to get to break resistances. So I think right now fake breakouts are down the road. We can try faking it higher, no problem with that. The euro can just try to surge again, fuck that resistance, but I think we don't have enough strength to go fucking out up right now. Regarding the time we've been ranging out there, we might need an extended range in here just to make the head and shoulder pattern terminated. This is way too much of a shoulder in here to consider this one terminated already. Of course, that's speculative. I can be wrong. And as I said, if euro is surging, I want to be among it. And in that perspective, I'll just release the EURJPY, get into eventually buying euro dollar. But I think it's way too early to make that choice right now. So I think yen is about to surge. We've been terminating this. So this is the only reason why I don't want to release NZD yen or euro yen, because I think there is the yen in there, and that yen is about to pick up the next following day because of the VIX. Remember what I said, whenever VIX will get in here, 11.4, 11.3, we should have to buy this thing, because I'm just waiting for a signal right now, okay? I'm waiting for a 2-hour chart signal, which will be a bullish engulfing of a 2-hour candle. So I'm going to just put that alert right in front of you right now. So let me just take that pro alerts. So I want the close to cross over. Yeah, I'm not going to wait for the bar close. And I'm going to trigger an alert for this. So I'm not going to take VIX. So pro alerts, custom alert, VIX engulfing. Buy. So that will be a buy entry out there on the VIX to me. Speculative entry. I'm waiting for, I think it's going to go lower. I think we have potential to go lower today. So I'm just waiting for a 2-hour candle that will break the previous candle's high. Whenever I'll have it, I'll be ready enough to consider making a buy entry on the VIX. Obviously, stop loss will be below 10. So very low leverage on that trade, as the stop loss might be costing 10 to 12%. Okay, so it's probably a 0.1 leverage out there. But obviously, the gains are accordingly great. You expect 42% gains, which is approximately a 4% gain for a 1% risk, 4-to-1 ratio, interesting trade, but you want to trigger it right into the expected area. The lower we get, the better the risk reward will be for you, but I obviously want to take that trade. I'm just waiting for an additional information, additional signals. We just touch the level. I just want to have further information that we're getting in there. So it's right below. I want the 11.3 tested, which is not the case right now. So I'll wait for further information on that market. Gold is trying to break resistances. If we manage to do it, obviously the equity market is not going to like it. So as you can see, we've got breakout, break up patterns. We're still in the range, so this one could still be a fake breakout. But I see the target is right above all the resistances, leading me to believe that if we manage to go there, there probably is going to be a follow through on the gold. So I'm bullish on the gold, no questions asked. But if we go there and push below the target, I'll get leverage into gold. It's too early right now, but I think that market is mature enough to get into buying, into getting trend tradings triggering. So I'm just waiting because the timing is still indecisible right now, and I don't want to get in too early with leverage. That will be the worst mistake to make. So don't do yet, patiently waiting. But right now, the thing I do is basically I try to buy this. I'm watching closely to buy this. I'm watching closely to sell USO, buying the VIX. So you might have guessed what I'm about to do. I'll be probably selling US indices today. I'm just waiting to get nice signals to do it. So S&P 500 is breaking the resistance, making new historical highs. Great, clap, clap, clap. But I don't think we're going to go that far. So I'm just waiting to have the taking profit signal of that bullish impulse. Probably in a couple of days, probably not necessarily tomorrow, but we'll see. Depends on today's candle close. Either today we're going to reverse and break below the support, which means we're going to fail the historical highs. We're just going to sell instantly. And if that's what's about to come, we're going to have a brutal reversal. But that, to me, the least probable scenario. Most probable scenario, we'll hold the close until Friday. We manage to hold things up tomorrow. We have the taking profit at the end of that week, which means I'm not going to sell over week because too much risks of getting over week there. But probably right on Monday, I'll get into shorting that market, buying the VIX, buying the gold, selling the US oil, and selling US indices will be, I think, the timing and the topic of next week. But that will be not for end of the world kind of trades. They're just from what I can expect on the SPX. I expect the market to just go there in a few days, taking profit pattern in there, gonna have to pull back to those levels. So it will be probably a 2 to 4% pullback. We could just go there as well, wouldn't necessarily be a big pullback, but I think we're going to retrace that bullish impulse. So I don't know how it can go. I think an additional 1 to 2 days is somehow manageable out there, so I wouldn't necessarily sell right now. We've got room to go shorter, to go lower on the VIX. We've got room to handle the gold below resistances for a little while again. We'll still have room for the US oil to eventually break a resistance before getting bearish. We've got room on the euro dollar to work out that range. So we've got room everywhere to gain some time. And you know that time is good for US indices right now because time manages to go slightly higher bite by bite, taking the stairs up before taking the elevator down. But before taking the elevator, we're going to have pre-signals. And I think we're just going to restore and retrace back to those levels. Minimum 23% retracement, and I think we're going to go lower than that, probably a 38% retracement. Don't yet know where and how deep we could go, but I think generally wave 4, which is what we're doing here, sub wave 4, sorry about that wave count, it's not how it goes, it's not. This is, we made A, B, C, D, E, so termination of correction is in here when we terminate and found the bullish reactivation. So this is where a correction terminates with a triangle structure. So we've made wave 1 in here, damn it, okay, terminated wave 2 in here, now we're making wave 3, damn it. So we'll still have waves to make, okay? It's at best we're terminating wave 3 in here. We're going to see extensions of wave 1 out to wave 2, and we'll see where we are. Okay, so this is wave 1 to wave 2. So we're reaching potentially, as you can see, we didn't quite work out the 127. Let me just show this. Did we get to make 100 in here? I'm just trying to figure out what the market has been seeing or not seeing. So let me just show you. I'm making research. No, nothing is shown as there in there as well. And what if we do have this as extensions? Nothing either. Market's just trying to work things out, but I just don't know what kind of extension we might be searching for. It's really hard to handle. No, not this. Okay, so I don't think we're just going to forecast extension levels, or at least we're going to try forecasting that this one probably. I'm trying to figure out which one has been tested the most. I think this one doesn't really have interest. This one either. I don't know, it's hard to tell. So I'm just going to delete that for now instead of this. So waiting for taking profit signal near that area. Wait for a deeper pullback. That will be the wave 4. And then we'll have wave 5 to get right into the mid-October and second part of October seasonality, in where we're going to take, I'm going to take the big short ahead of Trump's re-election, mid-elections and things like that. I don't give a shit about that. This is the timing I want to get into shorting before getting into the bullish end of that year. I don't think we're going to have a bullish run on December, have the Christmas rally or whatever shit this is. I don't think we're going to nearly have it. I think things will get dirty right before that, so we'll see about that. It will be it will be necessitating market catalysts, but I think we're going to have more than that with Trump's bullshitting day after day for the midterm elections. We're going to have more than necessary catalysts to go downward, but it's still speculative, so we're going to wait for the price to go there. We're going to wait for signals as well. We're just going to respect the strategy to trade. So right now, patiently waiting. You know, I've been taking a bullish entry on the Shanghai Composite. I decided to take that profit simply because I think the market is just going to do the opposite of what it's supposed to do as long as it can, which means I'm just going to re-enter that trade if we manage to break resistances. But for some reasons, I think we're just going to not do it. The market's just going to pull back once again and just try to fuck up stop loss. This is just a taking profit pattern. This is what I figured out yesterday. I said, nah, that's just a taking profit. I'm aggressively buying right now. And I think the market's just going to fuck me up because this is what it does right now. You just do what's rational and the market will do the opposite just to fuck you up. So I just rather like to take the profits, even if that means entering later with better prices, with worse prices. I'd rather like to take a 1% gain straightforward instead of waiting for it to disappear in the next following days. So might be a bad choice out there, I just don't know, but I don't think the market is rational right now, so I'm going to wait for the switch in which the market will return to rationality, which we still far aren't. So that's basically it, waiting for the next few days to have some reactivation on the VIX, some signs of life, because right now it's a flat line on the US indices, so bullish flat line, VIX is going down. Even though trade war is peaking like it never did before, the market seems to have to consider this, okay, now it's too old as a catalyst, so we're just gonna walk away out of this to the upside once again. So increasing the risks management into the US. So the more risk we pile up, as I said, if some of those risks manage to show up, we're gonna have to reprice, and we're gonna have to reprice fucking downward. So keep that risk spared in your mind, aware that you don't trade just out of this. We need to have signals, we need to have seasonality with us to get to speculate. Right now is not the timing, so either the market find an unexpected catalyst to trigger the trades and we'll get in without problems with breakout trades, but right now speculating is not possible. So you just wait to get into the expected areas, wait to have signals to lower the risks. For now, as long as you speculate, the market will take you out, because we just have speculators. We've been talking about that. I hope you got the pricings, what's at play right now. We just have no one wants to take the decision, which leads us to one single thing, the thing that, as we do have only speculators, we've got speculators versus market makers, and the market makers will obviously get to chase your stop losses because they're generally closer than you're taking profits. When you enter a trade, you generally put a risk reward to at least 1 to 2, which makes it twice easier for the market maker to get to your stop loss rather than instead of getting to your stop losses, to your taking profits. So they're obviously chasing your stop losses first because they're easier to reach out to. And as everyone is speculating the same way, they're just doing the opposite. Even though it's irrational, it's stupid, and the market maker algorithm doesn't mean to make things rational. They're just there to fill up the liquidity, to reach out to liquidity area. Either it's rational, if it's good or bad, if it's priced in or not, if it follows the economy or not, we don't give a shit. Market makers are just there to provide liquidity into areas that lack of it. They're just going to force the market to go from point A to point B, even if point B is irrational and stupid, this is how it goes. And they're just going to go to the lowest risk management, which is generally the closest price to reach out to, which is the damn fucking stop losses of your strategies. So as long as we don't have institutionals limiting these actions from market makers, it's basically market makers versus speculators, and the speculators will always lose because the market maker doesn't lose. That's how it goes. The market maker doesn't lose ever. They can take risks, but manage risks. This is algorithm taking care of this, not humans behind a computer trying to fuck you up. It's just algorithms that have better information than you do, faster response, so they will be better than you. So no matter how you speculate, during those times you'll be wrong. Just because your strategy is right, but you're trading against someone that is smarter, that is faster, smarter than you, and no matter how, is going to take bigger gains than you. So you don't fight against something that is better than you. You just let go and wait for times in which those market makers won't be trading just against you, but against the entire market. So you wait for institutionals to get back in that market, which so far seems not to be the case. They're just waiting as well. So you can speculate, but if you do, you don't want to take big losses when the market maker is taking your stop losses. All right, I'm going to take the questions right now. And we're going to move on to something else. So obviously, I need to remind that to you. I will be off market tomorrow as I'm heading into Paris for some convention. So I'll be in Paris all week long, and then I'll be leaving to Geneva. So once again, for those who are living out there, I don't know if you're Australian or whatever, if you want to make yourself a move out to Geneva, I'm not going to move elsewhere, I just have 2 days out there. It will be from Tuesday to Thursday. So if you are ready to move to Geneva for any reasons you might want to have, I'm ready to meet you out there with lots of pleasure. It's just I cannot move out of this city, so if you get to come to me, will be lots of pleasure to meet you in person. So I'll be there from 25th of 27, and then leaving from 21st, to October 7th. I'll be in Malta, as I already said. So if you want to meet out there, we created a topic into the Discord channel right in here. So I decided to create a new category. So now we got a meeting, it's basically is meeting in French, they say rencontre. So right in here we got all the meetings. So we got a meeting in Paris, we got a meeting in Geneva, and you got a meeting in Malta. So if you want to set things up, this is where you're going to go and post messages to just know what we do, where we meet. So if you want to meet in Malta, either at the cryptocurrencies conventions, or if you want to just meet at a restaurant or checking a beer or whatever, this is what I'm ready to make a move toward you. I'll have a car right there, so I can be moving throughout the islands. Much more freedom out there. I'll be with friends, so if you want to meet friends, meet some guys, and make some nice encounters into cryptocurrency sectors, this is where you want to meet. So if you are out there during that period, really get to contact me. I'll be pleased to meet you guys in person. This is what we can do. I mean, trading is a fucking boring job each and every day in front of the damn same computer doing the damn exact same things. This is crazy fucking boring. So the pleasure I have to meet you guys in person is because of this. I mean, moving out and meeting guys in person is what brings socials into that work that we're crazy lacking of when we do work on a day-to-day basis. So anyway, that being said, taking the questions and moving out. So, I'm a normal person. I'm not here to sell dreams or whatever shit this is. I'm just a human being like you. If you want to meet like you, okay? Use more often vulgar words. Okay, I do like vulgar words because just the way you hear me right now, if you really get to meet me in person, you'll see that I'm the exact same person face to face. I'm not using any filter just because I'm speaking out loud in face of a microphone to hundreds of people. I don't really give a shit about that. It's just if we meet, you'll see I'm the exact same person, and I don't really understand why some people have different approaches when they're talking to people throughout a microphone and when they're face to face. I'm not a double-faced guy, okay? I just have one face, and it's going to be the exact same when we meet face to face and when we talk, and when I talk to you day to day throughout the microphone. Like that you include XRP. Yes, I do have XRP right now, but I still do have, but that was because of a mistake. I mean, if you've been watching for a month, I got Ripple in my portfolio at like a 500 euros thing, so it really is a tiny exposition out there. But I basically have it because I made a mistake back then. I didn't want to enter. I want to enter on a bullish breakout. Break up, and the market didn't break up, but I got executed at the market because I messed up with Bitstamp somehow. And I got into that trade and I said, okay, I'm gonna keep it because of it. And then I had stop loss on that trade, and for some reasons I deleted the stop loss on the Ethereum and I made the same on Ripple. So I deleted the stop by mistake, which made me, when we made the breakdown, I said, fuck it, why do I still have those Ripple in my portfolio? But we were so down that I said, okay, it's 500 euros, and I'm going to take them to the long side, to the long run. I'm going to buy and hold them, even if it wasn't the expected scenario at the beginning. But I'm only doing this because it's fucking 500 euros, so I don't really give a shit about that. I know that can be pretentious, or expect it to be this, but you have to think it the way I do. I mean, regarding to the entire portfolio, 500 euro is really negligible. This is nothing like I care about. I'm ready to lose them. So I'm agreeing to make a buy and hold out there just because of the tiny amount of money put it out there. If it was different, any different, I wouldn't have done that thing. Obviously, you don't switch from a speculative trade to a buy and hold just because you want it that way. It's not how it goes. You can only do this when you have put it that low leverage that is compatible with a buy and hold. Okay, so really makes the difference out there. I'm not the I'm not the kind of guy who says something and doesn't apply it. I said that clearly. You'd never have to change a trade that was a speculative trade and switching it to a long-term buy and hold if it's not fitting the things. So the only reason that led me to change this is because we were reaching to potential buy and hold long-term entries prices on Ripple when I figured out that the stop loss wasn't triggered. So when I figured this out, I said, fuck it, now we are too low to trigger the exit, so I'm switching to buy and hold, only because this was 500 euros. If, for example, I had 5 times this amount, I will obviously have taken the loss, eyes closed, just to buy at better prices afterwards, okay? So only because of this, I decided to do it, and you should never ever do the same unless you're in the same perspective, very, very, very low leverage, and already reaching out to long-term interesting prices. This is where you want to switch. Just to visualize things, if you were back then thinking that, okay, you bought speculative and you made a mistake and you're going to switch this to a buy and hold, I mean, fuck it, that was the worst choice ever. You were very far from long-term expected buy and hold prices. So there you shouldn't be having the same behavior as I just did, because it needs 2 conditions to switch a speculative trade to a long-term buy and hold. Low leverage, so even if you had low leverage back then, you shouldn't switch to a long-term buy and hold simply because you're far from buy and hold prices. Right in here on Ripple, we are buy and hold price. We're long-term buy and hold price below those levels. So when I figured out right here that I was stopped out, that I should have been stopped out and didn't trigger that, was way too late to get to release my ripples. So now it's buy and hold, because anyway, I think we're going to retrace at some point. And if I'm wrong, I'm just going to lose 500 euros. So regarding the risk I have in here, I still think I can make a pretty decent gain. So I'm ready to take that risk. So agreeing is great, but once again, don't just trade because I say things. Really, what I'm trying to teach you guys out there is just that each and every day, it's the same routine. Yeah, what I would like you guys to figure out while watching those videos for months is that you should be able to see right now that when I wake up in the morning, I know what I'm going to do. I just don't know what I'm going to see. Each and every day is going to be different, but the process is and remains the same each and every day. Most of the time, the answer to any questions I have, and you might have as well, is just wait. Sometimes the action is wait for a signal when we're close to an action price, to a price action. And then I wait for that signal, and when I do have that signal, I trigger the trade. I would like to take live trades with you guys, but I do swing trades, which means I do take 5 trades in a week when it's a good week. How the hell do you want me to manage being in front of the computer, ready to record, and things like that when the trade triggers? So I do my best to go out there on the social networks telling you when I do buy, when I do sell, or anything like that. But what you need to take out from me in here is the process. Build your own process, inspire from mine, and just build your own. And whenever you have found out your process, you don't want to change any fucking thing from this. Even if it means that it leads you to potential losses sometimes, losses are part of the game. You don't have to change things because you just took a loss. You're just going to have to repeat that same thing each and every fucking day until you get to being right and take the gain. Taking the losses is part of the game. All you care about is taking much bigger gains than the losses. Okay? Bye guys, have a good weekend. We're going to meet again on Monday, and of course there will be just Monday as I'll be leaving on Tuesday, so we'll have just Monday next week and just Friday as well, and then after that nothing, as I'll be into Malta. So bye guys, and see you there for those who will make the move, and see you on Monday, Friday, and then 2 weeks from now for others. Bye guys.